You've said before that China reopening will be a big game changer for the oil prices. Yeah, when will China demand return to put the market back into deficit?
We think the market is now in a large deficit. We're 2.3 million barrels per day in the third quarter, and given the news about Saudi and Russia extending their cuts, deficit in the fourth quarter will again be quite large and likely be close to 2 million barrels per day. And China's reopening and remarkably solid China oil demand growth is a major contributor to the return to deficits. Take the following facts. We estimate that China oil demand just reached a year high and is now up almost 10% year over year, significantly outperforming GDP growth that our China economists are tracking just below 5% year over year for the third quarter. So a pretty significant disconnect between strong China oil demand growth and more moderate China overall macro economic activity performance.
When the demand picture returns further, are there expectations that OPEC Plus will ramp up supply, or are they likely to keep production on hold?
Yeah, so our base case is that the third production cut, the unilateral voluntary cuts by Saudi Arabia worth 1 million barrels per day that started in July will be reversed early next year, and that the second round of production cuts that was announced in the spring of this year will also be gradually and partially reversed. But I think the risks here are skewed towards lower OPEC Plus supply for longer. For instance, because Saudi Arabia may really test the limits of its pricing power that we now think is elevated pricing power because the supply response, for instance, from U.S. shale, because of financial discipline, has diminished, and because the partnership between Russia and Saudi Arabia is increasing the effective market share of OPEC Plus and increasing the effective pricing power of the cartel.